I think especially if you have people coming in that have seen disasters like this saying, no, this is bad.
Yeah, yeah, this is bad.
There's a
Just
certain
no
level
accountability,
of, yeah,
no customer protections.
right.
Um,
But I honestly, the other thing I wanted to talk about here, and that we had talked about in the other episode, is how do we get here?
how did we get here?
How did we get to the spot where people are throwing money at this guy, funding round after funding round? They see him as the crypto genius, right? Who went to MIT and has all these accolades. How do we get there?
Take it or leave it, baby.
Yeah, you were talking about that
Take it
mentality
or
that
leave
in
it.
some of those meetings. Explain that a little bit more.
Take it or leave it. So,
What up, what up, what up?
yo, welcome back to this
Super secret!
Founders Drive.
We still need a theme song. Still waiting for that. Still waiting for one of you viewers to send it in.
All right. So, we were just talking about the assets of Sam Bankman-Fried's FTX exchange. This is following up the episode that we just put out on YouTube. But you were talking about how you can have assets on your balance sheet, how a company can have assets on their balance sheet but still go bankrupt.
Positive assets and still go bankrupt. Yes. It's very interesting. Most people think when I'm bankrupt, I have nothing.
Mm-hmm.
When I'm bankrupt, I'm homeless. Everything, all my options are gone. But specifically with Chapter 11, that's not necessarily the case. I mean, I know 50 Cent had a great line about, the whole going bankrupt, and he's still doing just fine. But yeah, essentially FTX had what you would consider, I guess, like a net positive asset balance, which means like the things that they owned, the things that they had on their balance sheet were positive in terms of their equity, but their debts were enough to bankrupt the company, I guess is the conclusion that was come to, because the assets, if you were to sell those assets, wouldn't cover those debts.
Yeah. So it's, I mean, at the simplest form, when you look at a balance sheet, it's measuring assets, liabilities, and then shareholder equity, which is the difference between those assets and liabilities. Assets, and this might be helpful thinking about it in terms of a different asset instead of like the tokens. So actually, well, before we even get into that, maybe you describe the FTT tokens and what they had, and add a little bit more context to the Sam Bankman-Fried situation.
Sam Bankman-Fried, just like a quick rundown, right? CEO and founder of FTX and Alameda Research. They had this deal kind of going on where he would buy and sell his token, FTT tokens, through FTX using Alameda Research funds. And so buying those assets and holding them on your books, you have a certain market price you can get for these assets, which is inflated, obviously, if you're the one buying them and causing the market to have that price. But also using customer funds from Alameda to buy those tokens, and then having the token drop is where you get into this scenario where it's like, okay, I've took money from people and I can't give it back because my assets are just not worth it. I can't sell to be solvent. And so even though the company might have, let's say, $900 million in positive assets, if my debts are $1 billion, I can go bankrupt.
Yeah.
So, does that add more context in terms of...
And so we were talking, and the thing that you wanted to kind of highlight on is just the idea that, okay, you have assets and liabilities. The example that I think might actually add more, add a little bit of clarity around this is, if you have your logo,
okay,
and you get in this, and you valued your logo and your brand at $10 billion.
Sure.
You're like Nike or something like that, I don't know. And then you realize that, oh man, we're in a tiff. We can't go. I love Phil Knight, but we can't, make shoes in China anymore. We have to do it in America.
Yeah.
And we have way too many liabilities right now, and we can't cover everything. And so if they were to say, on paper, you might say, oh, the brand is worth $20 billion and the liabilities and are $10 billion. But if the assets were 12 billion of those, so if a majority of it was tied up in the logo and you tried to sell that, well, then you don't have a company anymore because you sold your logo.
Yeah.
And so even though you can value certain things, certain assets, and it can look positive on the balance sheet, how you actually arrive at that valuation matters, and what that asset actually is matters, because if you don't hold it, it's no longer an asset to you. So you can't necessarily keep the company going while also covering your liabilities and expenses.
Right. Right. Yep. 100%.
And so that's the whole situation. So with FTX and the tokens, if they were to, they have all these tokens valued at a super high
market price
on FTX's balance sheet, or on FTX's balance sheet, but Alameda owned most of them. And Alameda is basically a company owned by the owners of FTX. And so they buoyed that the value of the shares by basically trading them internally through some different companies.
Yes, and then obviously if you're the one doing those trades, if you start to sell off a very large position, by the time you get halfway through your position, your market price is not going to be the same market price.
Well, people are going to start saying, well, you guys don't even believe in this. I want to dump my shares if you're not going to keep them.
Yeah, market effects is going to, or market economics are going to happen, where that market price is not going to be the same once you get through at least half your volume, because you've got such a big position. And so when you're talking to investors and you're talking to people saying, I have this much of this asset on the books, it might look like a really good, state of affairs, but then in practice, if you were to liquidate, you wouldn't get that same amount of money.
Right.
And so you're effectively lying to these people by inflating your assets.
And it just doesn't really do much.
No, and that could have been a singular issue, but it was gas on the fire of stealing funds, commingling assets and stuff like that. So, but that was one of those things that I thought was really interesting, where the companies have money. They're not completely broke, and I believe the U.S. version of FTX was completely solvent. But the international ones were not.
Yeah, I mean, they had $5.8 billion of FTT tokens on Alameda.
That's wild.
And then it triggered that run on the bank when Binance said that they're going to liquidate all of their FTT holdings. And then people started saying, wait a minute, well, if that's a big, so imagine if Alameda started saying, okay, well, we need to get some cash, so we're going to liquidate our holdings right now. It would be an even bigger trigger because of the relationship between Alameda and FTX. Because it doesn't just signal that on paper, that's one thing, but then it goes to the objectivity discussion we were having in the other episode, where it's when people see you making this objective trade, subjectively they start thinking,
the objective trade.
Yeah, objective trade, but subjectively they start thinking, wait a minute, if they're getting rid of their own asset, why should I hold it? Like, especially in that volume, if they're just dumping it, why would I want to hold it? I lose trust. And that's the thing where, going into the whole objectivity and subjectivity thing, trust is a subjective thing. It's a feeling. Do I feel like I trust this?
Same thing if you were an effective altruist and you weren't donating any of your money to causes. It's like, are you actually an effective altruist, or are you not?
Right. Exactly. So no, that's an interesting discussion. And it also goes into the whole assets, liabilities, and just how to read it, because I think people think it's a perfect science, but it's not. I mean,
no, there's some interpretation there. Yeah, for sure.
But the things that people put on there is the structure of the finance is and how the statements relate to each other is pretty objective.
That's very concrete.
Right. But what goes in there is where it's subjective, and how people, say, well, this is and that's like,
and that's where is an interesting conversation we had around Elon's companies and how he might be able to do that, being able to swap in and out talent, to swap in and out ideas and knowledge between his different companies, and then to say, oh, hey, because of these force multipliers, we are now worth together as a unit this amount of money. There's going to be some inflation there, and
what's cool is he doesn't necessarily even have. Well, it does become pretty interesting because he did make a purchase bought one of his companies from another company.
Right.
But even if you have an outside evaluation on that and an appraisal on the assets of XAI, which FTX was not doing.
Right. A little more regulation.
Even if you do it, you can beef it up in a way where you're like, okay, I bought it for $40 billion. I have to increase the value of it. How do I do that? Well, I go and buy a whole bunch of hardware because there's a huge opportunity there to align with the mission here. And I know that it's going to get appraised from a third party because I have created real value here.
Right.
And so when you do make the purchase and you make it public, then there is a value there because people can see that, and then they can take action off of that, and it can work in your favor. But with
100%.
this thing, it seemed like there was just a lot of regulatory things that were just missing, and I mean, it's clear in the way that things shaked out.
Yeah, I think especially if you have people coming in that have seen disasters like this saying, no, this is bad.
Yeah, this is bad.
There's a certain
no
level
accountability,
yeah.
no customer protections.
Right. But I honestly, the other thing I wanted to talk about here, and that we had talked about in the other episode, is how did we get here?
How did we get here?
How did we get to the spot where people are throwing money at this guy, funding round after funding round? They see him as the crypto genius, right? Who went to MIT and has all these accolades. How do we get there?
Take it or leave it, baby.
Yeah, you were talking about that mentality that in some of those meetings. Explain that a little bit more.
Take it or leave it. So there was anecdotes of Sam Bankman-Fried in a lot of his fundraising rounds saying to people that asked too many questions, take it or leave it. Take it or leave it. And how he even got to that point is he created a lot of leverage early on in his arbitrage trades between America and Japan.
Yep.
And
made real money.
He was sitting on what, $25-30 million
a month, I think, is what they were doing.
But he, I think, came away with that in and of itself. The volume that they were doing though was a lot in and of itself too. But
right.
So he basically had this place where he was trying to fundraise as much money as possible, and so he could really apply a take it or leave it mentality. He could walk away from the trade, and I think that in and of itself provides an air of confidence. But then beyond that, he was very, very good at framing what people were doing. He was very good at positioning the company and what they were doing in a way where it created a sense of FOMO, especially when coupled with the momentum that they had in terms of the crypto successes that they saw.
Yeah, I think that narrative that you can start spitting for yourself, there's ways to leverage that down the line and in other situations.
Yeah.
And so starting that's one thing, starting it early and not waiting until you're in the room to start building a personal brand. So starting that early, and then also being aware of how you're going to leverage that stuff.
Yeah.
Right.
So getting more into it, because this is something that he did really, really clearly.
Yep.
He's very good at framing, and a lot of people talk about framing in the abstract. I want to talk about it a little bit more concretely here. We're in the super secret guide, after all. What he did really, really well is he was very good at casting roles. So when you think of a frame, think of it like you're watching through the frame of a camera, and what you're seeing is what's eventually going to be on a screen or a TV.
Yep.
When you think of framing, you can think of pictures. Like if you go to a museum, everything is in a frame because they're trying to focus your attention, frame your mind around what you should be focusing on. And so in this situation, when you see a frame, especially with people, if we're thinking movies now, you'll see different people there. So one of the first things that you want to do is know who's playing what role.
Yep.
Shakespeare used to say, the world's a stage. We're just actors on the stage. And so when we think about framing, that's more true than I could even begin to articulate.
Yep.
The fact that Shakespeare understood this is long ago is really powerful too. But what Sam Bankman-Fried was really good at doing is casting roles. I'm the responsible one, but he's not the responsible one. Even to the point where he was saying it, and he was coming in with shorts, a t-shirt on, like an old shirt from his own company.
Yeah.
And he's sleeping on bean bags and everything. He was like, I'm the responsible one. I'm the person who knows about securities and futures and derivatives, and I understand crypto because, and now if you can start adding reasons into your role casting, you can develop an even stronger frame. But that's the first part of it. The next part of it is the commitment to the frame, and that's where the conviction and the belief comes into mind.
Yep.
And that really helps to have a real philosophy around that, because people are drawn to conviction. It's magnetic and it's attractive, and what you do with it is you can move mountains with that.
Yeah.
But when I think of framing, I hear people talk about it in the weirdest ways. Control this and do that, and it's not bad information, but I don't think it's practical. when I think of practical, I'm like, okay, what can you do tomorrow? Well, in your pitch, is there a very clear role that's being cast?
Right.
How are you casting yourself in the role? Are you casting it as somebody who, and this is something that we've been talking about more and more, especially with like the turn of change with AI, and what that means as a software developer.
Exactly.
Because people are going to try to cast our role or cast what we can do and what we can't do.
Yep.
And being able to one, understand that people are routinely trying to do this, and then two, being able to then develop your own role and then promote that is really powerful. But it's also how we build our personal brand.
Exactly. Yeah, and that's like the entire thing on building a personal brand is also to be intentional.
Yeah.
To not just go through the motions and have a pitch and not think about what you're talking about in terms of like, who's the role? What role am I? How are people going to see this? Or how are they going to feel when I present this or when I show them this? Like, that's all part of the frame.
It is. And how are they going to feel when they present this? But I'd say even prior to that is the idea of the casting. We are always casting. And so one thing that I noticed with sales, and another thing even more in fundraising, is the casting of a role. When you walk into a fundraising meeting, and we see the pattern with all these people, the people that fundraise are the ones who are willing to say no and basically saying like, I don't need what you're giving me. but they can also make an offer. Yeah. And it's kind of take it or leave it, like, right? But what they're doing is typically when people walk in, it's, I need money from you. And so you've positioned yourself. And here's the thing, it's roles aren't always cast explicitly. Yes. Sometimes they're cast implicitly by your actions,
always.
Right?
They're almost always cast.
Right.
It's so rare, unless you're at a very special meeting, for them to be like, no, this is your role.
Yeah, right? Yeah.
Almost always it's implicit.
And if it gets to that point where they're like, no, you're the employee, or like, no, you're
things have gone wrong.
Yeah, or something. But it happened. But when you see it, you can't unsee it. So when people say like, you're an asshole, it's like you're casting somebody as an asshole in your movie. And so being able to, like, in the fundraising context, it's if you go in and you say, I need money from you, give it to me, you come in needy. And so people say, like, don't be needy. That's what they mean, is you've cast yourself in this role where you need something. And what that does, like it or not, is it puts the other person in a frame of mind, because now they feel superior to you. Exactly. They feel like a king. Get this peasant out of here.
I can easily say no.
Yeah. Or and it happened. I've talked about this before when we were at that demo day. Quick, they tried to cast me in the role of
jester,
laugh, dance. And it's like people kind of are like that. It's kind of fucked up, but
I mean, they are like that intuitively, almost.
Yeah.
And so you really have to like, not. It's almost like the best defense here is a good offense.
Right.
Come out of the gate, because I firmly believe that defense isn't passive. You have to be as aggressive as you are on offense, trying to get in someone's face and everything. Be as aggressive on defense. You're not going to hit me. Just be as aggressive. Yeah. It's just in a different.
100%. Aggressive. Here's another thing too. Is like aggression means just being willing to make the first move.
Which I think is interesting do I?
Yeah, a little blood.
That's fine. But I think it's very interesting.
See, we bleed for you. We bleed.
Comparing that, like having an aggressive defensive position.
Well, an aggressive,
you know what I mean?
An aggressive defenseman is going to make a move first to ensure that nothing gets beyond here. It's not just going to wait for things to happen.
Exactly, which is interesting. Yeah, I like that. I like that framing of that.
Yeah, and so it's like, but that is one of those things where it's like when. Like in pitching, it's one of those things that like it's just hard to teach, really. Yeah. I think that's another thing too. It's not, and I think once you know it, then you run into people that can't really communicate it and teach it, people that are intuitively understand it, and then people that know it and they're like, I'm not telling you this shit because that's my competitive advantage. Right. You know?
I think that this is why you tune into the super secret. It's because we're going to label something that's very obvious. Yeah. That happens in every single interaction that you have. Yeah. But if you're not aware of it, it'll go right over your head.
Yeah. Yeah. Like if you can't see it, then you won't be able to conceptualize it, identify it in the wild. And that's the main differentiator, is how do we identify this thing in the wild and go about it. So yeah, that's the main thing that I want to say around pitching and framing, is like casting roles. That's the thing that we always have to be mindful of, is what role am I playing right now. And I think it can be really liberating, because it can give you a sense of freedom and authority that you might not have felt otherwise.
Yeah.
What's also intriguing is just looking back at the people who, in our Founders Drive, collection, the people who seem to be cognizant of that. I mean, I think when I look at,
yeah, who jumps into mind for you?
Well, first, right now, it's Sam Bankman-Fried. Just going in
that's a
there
big
being like,
one.
take it or leave it. He's like, I have something that's more valuable than you. So you can either take it or leave it. Because if you're trying to play that role of you're the investor with the money, you're a fucking idiot and you're wrong. And which is kind of it. It's like, if somebody's not playing their role, we cast them.
Which is, and something we talked about a little bit before, we saw very similar with Cluey.
Yeah.
How he was like, listen, I'm not talking about funding. I'm not talking about money.
Yeah.
If you want, you can come to our offices and do it on my time, on my schedule, and we'll see if you get into the building.
Yeah.
But I'm not going to bend over backwards and fly out to your area of the, valley to try and get funding. Like, I'm just not doing that. I'm too busy.
Yeah, because in his role, and that's another thing too, is even if you claim the role of, so first it's casting the roles.
Yep.
But this kind of goes hand in hand with defining the roles too. What does it actually mean to be an entrepreneur and a builder? Do you value the venture capitalist or the entrepreneurial role more? Because if you think the VC role is more important, then you're always going to diminish the value that you bring into a conversation. You have to be willing to say certain things. And oh man, we could take this even further. How deep do we want to go with the super secret?
Let's give him a little bit more. Just a little bit more.
So once you've defined it and once you've defined expectations of a role, you can start developing your own script.
Yes.
With the role. You can start saying, okay, what are things that the best person in my role would say here? And you can look towards the past and start saying, okay, well, like, look, we're studying entrepreneurs. Jake's been on calls where like I say things that are directly inspired from here because it's like, that's the role that we want to play, is the best entrepreneurs of all time. And we also want to know what some of the worst entrepreneurs did of all time.
And avoid that.
And exactly. But we're studying the role of entrepreneur, what they do, what they can get away with it, because we want to play it to the best of our ability. Yeah. And this is something that's not limited to us. It's something that all of us can do.
Yeah, and it's not playing as in like, we're going to play house. Yeah. You know what I mean? It's like, if you act in the role, things in real life will happen. Yeah,
but I would actually walk back and say, house is the child's version of this. It gets us ready to play roles in life.
Right.
Who's the husband? Who's the wife? Who are the kids? And all of that. Yes. And that lets you know, like, you can start imitating. I think with role play, one of the best advices that I've heard is like, one, there's a scientific backing that shows that when you're playful, you're actually more charismatic, you're more persuasive, you're more magnetic, and more playful people are successful. So when you're playing, this is an adult version of house. We're all playing an adult version of house right now.
Yep.
And the people that can recognize that and then play their roles effectively are the ones who can actually create the world that, like you're saying, that they want.
The other thing I really like about that is when you define a role, every role ever has a backstory. Has some type of lore.
Yeah.
And if you don't know what that is, maybe you're meeting somebody for the first time, you can make it to fit whatever role you want to.
Yeah.
Because you can mold that backstory. You can actually give that role lore, if it helps, in your head, to give you a better frame in the meeting, in the whatever you're trying to do. And this is, again, kind of akin to, if you feel like the builder, the entrepreneur is the more valuable of, between them and a VC, then maybe go into a backstory where the VC's never built anything.
Yeah.
The VC hasn't coded. The VC doesn't know AI and LLMs.
A VC,
you can start doing these things that give you a much better role to then fill if that's, where you're going for in that conversation.
Yo, 100%. It's like the VC doesn't know what to do with their money. A VC is willing to invest in a Sam Bankman-Fried.
Yeah.
And so their discernment for technology isn't always as nuanced as somebody who's building. But again, you have to be able to see yourself in that role.
Yes.
And like I've talked about this before, but I think preparing like an actor is
very powerful.
Because it gives you a different frame of mind, and but we're like doing this in real life, which is like we almost have to prepare even more for the role.
Yeah, there's no retakes.
Yeah.
You can't be like, all right, cut, and we're gonna retake this.
Actually, can we just run that? I feel like I can do it better next time.
I'll ask you for money again.
yeah, but this time I'm gonna like. But
yeah,
man, I think that was a really powerful episode. So
hopefully you guys learned something from this super secret drive. Check us out next week with another founder and another super secret drive. Yes. Anything else?
Just do with this information as you need.
I love it.
Peace.
Peace.